Flight Centre has defied the gloom hanging over Australia's tourism industry, announcing an increase in its profit guidance and plans to add 1,000 jobs this financial year. That upbeat forecast saw the travel agency's shares jump 6% today. But while Flight Centre is adding jobs, there are signs the rest of the labour market is weakening. Neil Woolrich reports.
Times might be tough in Australia's domestic tourism business, but Flight Centre is still cashing in as record numbers of Australians take holidays overseas. Based on its unaudited accounts, Flight Centre is on track to post a record profit for the year to June, up 16 to 18% on the previous result.
We're moderately happy. Obviously, we'd always like to do a bit better, but I think the last 12 months we've shown, particularly in leisure, and particularly with our overseas geographies, the market's held up pretty well.
This is a pretty strong outcome in the current retail environment, and we were quite impressed.
Flight Centre has achieved record results in Australia, China, the US and the UK, despite another year of turmoil either side of the Atlantic and a patchy economy at home.
Domestic in the last couple of years, 2.5 years in Australia, has been tough, and it's particularly evident here in Queensland. You talk to hoteliers on the coast, but there are some signs of revival, but it's also been balanced a bit by a reasonable growth in outbound international travellers.
The group is also planning to boost its workforce by about 8%, adding another 1,000 sales staff this financial year, with up to half of them in Australia.
The last few months, things have been up and down a bit, so I'm a bit cautious about what's going to happen in the next year or so.
The travel business has been changing a lot, so some companies are doing well, some have got their systems set up well, the internet works, others, your normal travel agent, quite a few of those have gone out of business as well, so there's a mixture of trends there.
Flight Centre's plan to add jobs in a struggling industry might give some support to the Reserve Bank's recent glass half full view of the Australian economy. However, economist Ivan Cahoon says ANZ's job advertisement series shows the labour market is softening overall, with weakness in most areas outside of mining.
If you just looked at the unemployment numbers, you'd say yes, they're still very low, and on a global scale they're fantastic. If you look at some of the other indicators, like the number of people receiving unemployment benefits from the government, they're trending up slightly, very slowly.
Flight Centre shares jumped 6% on its revised earnings forecast, but it's not all smooth sailing. The company will face allegations of price fixing in October in a court action brought by the ACCC.
Threats of legal action or regulatory action do tend to be overblown by market investors. It's right to be concerned about it, and it's right to keep an eye on it, but it doesn't fundamentally affect our investment thesis on this stock.
While Flight Centre is planning for growth in the new financial year, there's more turbulence for Qantas. Emirates has announced plans to bring more flights to Australia just a week after Singapore said it would do the same, putting even greater pressure on the low-flying Kangaroo's loss-making international operations.